In his address to the bankers, the governor couldn't have skipped addressing the issue of interest rates, of which, despite recent cuts, is now being blamed for a slowdown in credit growth.
If lending rates were capped, the borrowers who would suffer the most in terms of losing access to credit would be the small and medium-term enterprises. This is because SMEs are both more risky and involve higher transaction costs for the banks as a share of the amount that they borrow than prime borrowers borrow. Given these costs, banks can only extend credit to SMEs in a commercially viable manner.
Kenya's former central bank governor, Professor Njuguna Ndungu, has urged bankers to harness the power of digital financial services.
Every time the public policy, the politicians will tell us, agriculture is the mainstay of the economy, but banks are not lending to agriculture. The next day, SMEs are important to this economy. They are going to provide employment and all that. You are not lending to SMEs. But once you succeed in financial inclusion, you do not have to have directives in terms of which sector to lend. You can actually come up with different products with different characteristics for particular sectors of the economy. And they are going to be sustainable because they are going to be provided on the platform of financial inclusion.
However, some players were quick to raise queries on managing new risks, in particular digital disruption, saying risk function will be key.
They've come up to say that banks are using other people's money. The experimentation needs to be regulated. You can't just experiment with people's money. Risk management is the key as far as banking is concerned. I wanted to hear from any one of you, what would be your advice with regard to the speed with which banks have to move or to be able to do innovations? Should they continue to be followers? Should they wait for you, the fintechs and the telecoms, doing the innovation, or should they, move ahead, taking into account the fact that they are using other people's money and the level of experimentation needs to be limited?
And with telecoms seen as the backbone, crucial to digital revolution, who better to answer the question on cyber-related risks than the experts themselves?
All the money that invested, all this huge system, huge server rooms, huge data centers, all this protection will not help. They must be trained to simulate the right scenarios, the same scenarios that the hackers are using. A simple Gmail with a very simple document, and suddenly the bank is hacked. Another thing, so much information is in the net. If we talk about LinkedIn, Facebook, all this one, we can tell easily the hacker that sits in Indonesia, he knows who is the financial manager of the bank, who is the risk manager of the bank, he knows everything.
And as banks embark on the digital journey, there may be a new task, staying connected and relevant to customers.
As long as the banks continue speaking a language we, the unbanked, don't speak, that gap is going to be there. What is the plan for me, my mother, and my daughters who are farmers?
Financial sector players at this conference all came out in agreement that the use of ICT as an emerging financial services platform will help banks reach their intended market niche. However, the challenge remains with balancing regulatory changes in harnessing the digital revolution to change the future of banking for the better. They also discussed issues like the interest rates, of which banks came out with guards on, saying operational costs will always affect the uptake of financial services. How that will be solved in the future remains to be seen. Tumusiime, NTV Tonight at the Kampala Serena Conference Center.